Top 10 African financial markets, Southern Africa's and East Africa's dominance and legacy of shared currency. In a continent marked by diverse economic landscapes, the strength of financial markets often correlates with regional integration and historical economic ties. According to the 2025 Absa Africa Financial Markets Index, the top-performing financial markets in Africa reveal a pronounced concentration of strength in its southern and eastern regions. The Absa Index evaluates markets based on their market depth, access to foreign exchange, legal frameworks, and macroeconomic stability. Top 10 African financial markets. Number 1 is South Africa, with the deepest and most liquid capital markets, advanced infrastructure on the continent. From Southern Africa. Number 2 is Mauritius, leading in premier legal and regulatory environment for investment. From East Africa/Indian Ocean. Big Nigeria comes in with the largest economy, significant market size and product diversity. Representing West Africa. Number 4 is Botswana, with an exceptional macroeconomic stability and substantial pension assets. From the Southern African region. Number 5 is Kenya's highly active domestic investor base and pioneering fintech innovation. Coming in for East Africa. Number 6 is Zambia, with notable improvements in transparency in the past decades and market reforms. Also from Southern Africa. Number 7 is Ghana and its well-developed domestic debt market. Also from West Africa. Number 8 is beautiful Tanzania and their positive foreign exchange and infrastructure reforms. Again from East Africa. Number 9 is Uganda's robust legal framework and strong pension sector. East Africa. And lastly at 10 is the Southern African's Namibia, with sophisticated domestic investor base and savings culture. A key historical factor underpinning this modern dominance is the Common Monetary Area, an arrangement where several Southern African nations once shared the South African rand as a common currency, fostering deep financial linkages that continue to influence market resilience today. Southern Africa's collective strength and the legacy of the Rand Union. The data shows that 4 of the top 10 nations, South Africa, Botswana, Zambia, and Namibia, are in Southern Africa. This is not a coincidence but the result of sustained economic integration. A crucial, often overlooked historical foundation for this is the Common Monetary Area and these nations' cultural similarities. For decades, Lesotho, Namibia, and Eswatini formerly used the South African rand as their legal tender, while Botswana also had a closely linked currency early on. Although Botswana and later others established their own currencies, this system created enduring benefits. For example, monetary policy discipline, it imposed a framework of financial stability and low inflation imported from South Africa. Seamless capital flow, it allowed for the free movement of capital within the bloc, deepening financial integration. Institutional alignment, it led to harmonized banking regulations and financial standards across borders. This legacy has evolved into the deeply interconnected and resilient financial systems we see today. Nations like Namibia and Botswana, though now with independent currencies, maintain strong pegs or close management relative to the rand, ensuring continued stability. This historical cohesion directly supports the Absa report's finding that countries with strong domestic and regionally integrated capital markets are better positioned to withstand external economic shocks. Other continental trends and the path forward. The 2025 index highlights a challenging yet progressive environment. For one, selective progress. Only 10 of 29 index countries improved their overall scores, reflecting headwinds from global trade policy shifts and reduced foreign aid. 2. Expert prescription. The African Development Bank emphasizes that long-term local currency financing and efficient domestic resource mobilization are key to future development, allowing nations to fund investments without over-reliance on volatile foreign capital. In summary, the dominance of Southern and Eastern African nations in continental financial rankings is a powerful testament to the lasting impact of deep economic and monetary integration. Their shared history under a common currency zone laid the groundwork for the mature, stable, and interconnected markets that lead Africa today, offering a model for regional financial resilience.